Good evening, everybody, and welcome. This evening, we're having a panel discussion, and the topic is Paying Up, Is Tax a Question of Ethics? I'd like to firstly thank JustShare for hosting this event with Christian Aid. For those of you who maybe aren't aware of them or their work, I just want to give you a quick outline. JustShare is a coalition of churches and development agencies. Christian Aid is one of their members. They advocate on issues of global development and economic injustice through monthly events targeted to the City of London. And of course, this is one of those this evening. The organisation promotes both justice for the poorest in the world and also to get more world resources available to all. There are lots of information flyers around, so if there's anything else you'd like to know about them, that would be great. Just also to say, the way the evening is going to pan out, I'll introduce everybody to the three panellists here on these chairs, and then each of the panellists is going to speak for about 5 to 8 minutes. We will have about half an hour's discussion at the end where we can take questions from the floor and hopefully give you the answers that you're looking for. We're hoping to finish the panel discussion by 7 o'clock. So without further ado, I'll introduce you to the panellists. So our first panellist will be Richard D. North. Richard is a veteran writer and also a broadcaster and a fellow with the Institute of Economic Affairs and the Social Affairs Unit. Our second panellist will be Heather Self. Heather is a non-lawyer partner at Pinsent Masons and also has over 30 years' experience in tax. And our third panellist is John Christensen. John directs the Tax Justice Network, an expert-led network that helps will take global efforts to tackle tax havens and tax justice. So each of the panellists will go through their different perspectives. I think one of the things I'd like to say at the start of this panel discussion is that the Queen today beat us a little bit into one of the landmark opportunities on the new public beneficial ownership registers. In her speech, she let us all know that the next Parliament will actually pass legislation. Many people who are sitting here this evening have worked together to campaign or lobby or actually create the policy that has created that potential bill. So I think congratulations are in order to everybody before we start this debate. So, Richard, can I pass to you first?
Sure. Hello. So I'm a free market sort of person, and I love globalization, and I'm rather keen on corporations and the great good they do in the world, which is almost entirely unintentional, but it's there, as they serve their customers, which is always a benefit in itself, almost always. I think tax is overwhelmingly a matter of law, not of ethics or morality. You pay taxes because you have to, and in a democracy, you're more or less happy to do so because you help decide what they would be. As a private citizen, you have a perfect right to avoid paying more taxes than you absolutely have to. It's a fair fight between you and the Exchequer. If you're a business, to that right to avoid taxes, it's very arguable you have a positive duty to, because you are mandated, almost your only raison d'etre, your only way of explaining yourself existentially is that you're there to serve your owners, the people who entrust their wealth to you, which we mustn't forget in rich countries like ours are usually pensioners, many of whom are quite poor. In the rich world, the paying of taxes is a matter of law. It's a fair fight between you and the Exchequer, whether you're a firm or a person. I do think there's a difference in the developing world when rich individuals or rich corporations, I should renounce my own usage of the word rich corporations. There is no such thing as a rich corporation in my view. But when Western individuals or Western corporations trade in countries which have a very inadequate legal framework, perhaps a very inadequate taxation framework, and yet they're generating wealth for themselves in those countries, then some more fluid sense of, some more moral sense of what one's obligation is comes into play in a quite different way. But coming to our sort of situation, one of the reasons why I'm so clear in my mind that corporations should just do what is self-interested in their own interests is that I strongly deprecate, I have reasons for rather profoundly disagreeing with the proposition that it is wise to think of firms as people. And one of the reasons is that they don't have feelings, they don't have consciences. They're not constituted like people to have feelings and consciences. So it's difficult to see quite what a moral impulse would be for an Amazon or an ICI. They haven't got the locus of such a thing as you and I might have, ought to have. But it's worse than that. One of the things I most disapprove of is the sense that somehow firms should present a face as though they were people who like other people and who like us. You know, the bank that thinks that it can persuade us that it somehow likes us, and that's why it's giving us cash back on our purchases, is a profoundly patronizing and silly idea. But it arises when civil society makes the mistake of negotiating things which should be a matter of law as a matter of something that you can whiz up in an Occupy protest or a Facebook campaign or a Twitter outrage. I disapprove of all those things because I strongly approve of strong democratic states negotiating with firms, each understanding the real interests of the other. And that way one has a democratically accountable, intellectually accountable kind of negotiation. And for those sorts of reasons, I will reiterate my view that we should be very careful when we pretend that, oh, and one other thing. I strongly feel that the tax rules by which international companies currently operate are not sensible. I'm open-minded as to the long-term economic value of tax havens or the current rules of domicility for firms. But they're a matter of negotiation, in my view, and it might well be, it probably is necessary, that government should come together and create a framework that works well for the governments in negotiation with one another for fear of having a chase to the bottom, for instance, with tax rates. That is the kind of thing governments could and should be doing, and perhaps they're a little slow to have got onto it. But I still, while I strongly recommend that that might be the thing that we're all needing to do, I very strongly deprecate the idea that one should, even if one was very good-hearted and believed in the sense of social justice and so on, one should be very careful to believe that one should therefore pressure firms towards this, that, or other, not least because people who have good hearts are often not very wise about economics. And in the end, the future of the world, the future of the poor of the world, will depend on a good economic framework, as well as the kindly thoughts of liberal people who might seek to influence those processes. Thanks.
Thank you, Richard, for your contribution. Can I next introduce Heather Self? Heather, as I've already mentioned, is a non-lawyer partner at Pinson Masons with over 30 years of experience in tax. She's been both a Group Director of Tax at Scottish Power, where she advised on numerous corporate transactions. You've also had the pleasure to work for HMRC on complex disputes with FTSE 100 companies and was a specialist advisor to the utilities sector, where she was involved in policy issues on energy generation and renewables. She's also a member of the CBI Tax Committee and a former chairman of the CIOT Technical Committee. And while at HMRC, she was a member of the Joint Working Group on the development of new controlled foreign companies regime. Heather, would you come and have the podium, please?
Thank you very much. So I'm coming at this as someone who is a tax techie person, but I will do my best not to get too techie tonight. I think it's very important that we work out what we mean by a fair share in a number of different ways. It's not a simple number. At one end of the spectrum, you've got evasion. That's fraud. That's companies or individuals lying about what money they've got, what they're doing, deceiving the tax authorities. No tax advisor has any time for that. That is clearly wrong. We then get to what is sometimes called aggressive avoidance. And that's probably best described as the too good to be true scheme. Those of you who've seen various recent comments about Jimmy Carr or Gary Barlow or other people who magically make a tax liability disappear without actually incurring the real risk that you have to incur to get a tax deduction. That's avoidance. And actually, most responsible tax advisors are against that too. And it might surprise you to know that the majority of large companies, certainly in this country, are also against that. I'm a member of the CBI Tax Committee, so I sit with people who work in large companies. The CBI has produced a statement of principles which they think that companies in the UK should abide by. And just to give you a flavour of those, companies should be open and transparent with HMRC about their tax affairs. They should engage in reasonable tax planning that is aligned with commercial and economic activity and does not lead to an abusive result. You can imagine that sentence took quite a while to draft at a committee meeting. In fact, this whole draft started off much longer and people kept saying, no, we can't say that bit, we can't say that bit. At one point I said, look, why don't we just say don't be evil and have done with it? So, aggressive avoidance where you magically make income disappear is less common than I think most people think, and certainly in the large reputable corporate sector it is rare. And that is not because, as Richard says, companies have suddenly decided to be nice and cuddly. Actually, it's in their own economic interests. If a company is going to take a very aggressive line on tax, and that is going to damage its reputation so its share price falls, that is not in the long-term interests of the company or its shareholders. So it's partly about wanting to do the right thing, but it's much more about what is in the long-term interests of the company and its shareholders. You then get to the more difficult areas of things which are actually part of current government policy and yet perhaps don't make sense. So, for example, there has been criticism in the press about some companies who get low UK tax bills because they pay a lot of interest. Well, I'm sorry, under current UK tax law, interest is a tax-deductible expense. There may be two problems with that. Companies may actually be going right up to the limit and having as much interest as they possibly can, and perhaps HMRC are not fighting their battles hard enough to make sure they only get the right amount deducted. It might also be a fault in government policy. This government has decided that it's better for the economy as a whole to have what they consider to be a competitive tax system, and as part of that bargain, negotiated freely at arm's length, they think it's a good thing for companies to get an interest deduction. So in my book, claiming an interest deduction is not tax avoidance. It might mean there's something wrong with the system, and it might mean the system has to be changed. But let's be clear what we're talking about. There are then also some deeply technical issues. I was at a conference a couple of weeks ago where a member of the audience was outraged that a large company could ever negotiate with HMRC to settle an issue. He said, well, you just pay up, you just pay the tax that's due. There was a tax case published this week where Next PLC has lost. And they've lost because they built some high-tech warehouses where goods came in, had to be repackaged, sorted out, transported, processed, and shipped out to customers. The UK tax law does not give, or at the time, did not give any tax allowances for retail buildings, but it did give tax allowances for industrial buildings, which are buildings where goods are subjected to any process. And so this whole tax case was, does what this company is doing, which was a wholly commercial thing, not being done for tax reasons, but does it qualify for a particular tax allowance? And that's taken several years to go up through the courts. So there are things where the tax position isn't clear, and that may be partly because the tax system is a mess, which in places it is, but it's not avoidance. So when we talk about fair share, I think it's important to understand what we're talking about, and I think we should be absolutely against aggressive avoidance. In fact, one tax director of a very large multinational said to me, our group tax policy can be stated pretty simply, it's don't take the mickey. So don't do things that don't make any commercial sense just because you think you're going to save tax. But from an NGO perspective, I think it's important that you understand whether you're criticising the behaviour of companies or the policy of governments. And that then takes me on to the whole North-South debate, and do we have governments negotiating freely, and is there a fair share for the Global South? I'd like to pay huge tribute to everybody at Christian Aid and the other NGOs who have firmly got this onto the agenda. I think it's great. I absolutely agree with the principle that it makes far more sense for a poor country to build a stable economy and a stable tax system and collect tax to pay for its needs rather than depending on aid. But having got it on the agenda, we now have the much more difficult question of how do we get there? And actually, that is not going to be simple. That's going to be a case of working together to see what makes sense. And part of that is going to be about the basics. If you don't have a system that accurately records the ownership of land, how are you going to collect the right amount of tax on the sale of a property? If you have got corrupt government officials who perhaps accept bribes in order not to charge tax, how are you going to know whether you've collected the right amount of tax? So I strongly feel that we actually have to start with getting the basics right in order to be able to enable countries to collect a fair share of tax. I'll leave it there. I'm very happy to contribute to questions afterwards.
Thank you, Heather. So our final panellist, John Christensen, as I've already mentioned, he directs the Tax Justice Network, but just a little bit of background. John was trained as a forensic investigator and economist. He has worked in many countries around the world, including a period of time working in offshore financial services with Tooch, Ross and Co. For 11 years, he was the economic advisor to the government of the British Channel Islands of Jersey, which is obviously an interesting perspective, and we look forward to hearing about that. And also, in 2003, he became what The Guardian was described as the unlikely figurehead of a worldwide campaign against tax avoidance. His research on small islands and offshore finance has been widely published in books and academic journals, and John has taken part in many films, television documentaries, and radio programmes. So, can I welcome John to the podium?
Right, well, thank you very much indeed for inviting me, particularly to an event like this. I feel very passionately, and I think I'm very well placed because I've worked in the public sector, I've worked in the private sector, and I've worked now in the NGO sector on this issue for some 35 years. And as an economist, I'm not at all aligned with Richard. It won't surprise you to hear that, maybe. I think that economics boils down to a set of rules. I simply do not recognise, having worked in government, this idea that there's a negotiation between companies and governments. It ain't like that in real life. In real life in Britain, and certainly in Jersey, where I've worked, and many developing countries, this is a completely distorted and one-sided negotiation, particularly when you have countries like Britain, where by and large our tax policies are written by the corporations. This is a captive area. So the idea that free negotiation is, to be blunt, naive beyond belief. This is where the golden rule applies. particularly in tax policy, those who have the gold make the rules. And that rich and powerful corporations have been making our tax rules for many years. I went into the Tax Justice Network precisely because for decades civil society has paid very little or no attention whatsoever to the international framework of rules which determine how multinational, transnational corporations will be taxed. You've heard both speakers say these rules are not fit for purpose, they are broken. They're not broken by accident. They're not broken because our politicians don't know any better. They're broken because of decades of lobbying by very, very powerful vested interests. And those interests are the wealthy and the powerful. So remember, this is where the golden rule applies. Those with the gold have shaped rules very much to their interests. And I think this country is as prone to state capture in the tax area as any other. I'd also want to kick into touch the idea that companies don't have any sense of moral duty. Actually, directors do. Last year, I commissioned one of Britain's leading law firms to give us a legal opinion on the fiduciary duties of directors in this area. It is absolutely clear that directors have no duty to avoid tax. But more importantly, as the company that does no evil has recently found through a shareholder plea to the AGM just 2 weeks ago, Google's shareholders are saying we expect our directors to take account of the longer-term interests of us as shareholders, and that includes the longer-term interests of paying tax in the jurisdictions where we work in order that we contribute to their long-term sustainability. They recognise a director's duty beyond the immediate short-term duty to pay back the dividends, maximise dividends in the short run. I think it's fair to say that there is a new emerging discussion around the morality of tax avoidance. I think that all tax avoidance, by definition, is unacceptable. Forget about aggressive tax avoidance and others. Tax planning, perfectly acceptable, but tax avoidance, by definition, involves exploiting loopholes that have not been explicitly agreed by government. And this is why I, as an economist, pour scorn on the free marketeers' idea that it's great for the big companies to engage in tax avoidance. Because if you really believe in free and fair markets, then you must accept that it is unacceptable for Starbucks to be able to use tax havens when the local cafe around the corner, which I use, cannot use tax havens. This is a massive market distortion. And frankly, the idea that tax competition is acceptable in any circumstances is morally unacceptable and anti-democratic and anti-market. Straight up. I don't talk about tax competition, I talk about tax wars. And that's how grave the situation is. We now face a situation globally where, as a result of a completely misconstrued globalization process, which hasn't taken account of the taxing rights of different countries, hasn't got the rules right, we have total market distortions which favor the transnational corporation over the local, undermines all possibility of fair competition between small companies and big companies. And the only logical outcome of these tax wars, which are comparable to trade wars and comparable to currency wars, is that we have a race to the bottom. And the bad news is the bottom isn't complete abolition or zero tax rates. The bottom leads to subsidies of capital. Get used to it. That's the future, and it's already here in some cases. So this is something we should all be taking much more seriously than we do, especially free marketeers, because free marketeers talk about competition as an appropriate way for allocating resources within a fair free market economy. But when it comes down to it, actually, they're quite happy to see transnational companies abuse the tax system, putting them at a massive and unfair, harmful tax advantage. This is a moral issue because it leads, to a loss of choice within the market, a misallocation of resources, less innovation, less job creation, the whole works. That's my perspective as an economist. So is this a moral issue? Damn right it's a moral issue, because we now face a situation where governments across the world, and I don't think it's that different here in Britain, the situation is as grave here in Britain as it is in developing countries. Our tax policies are being shaped by capital. This country is becoming unequal. Read Piketty. I've reviewed Piketty. I'm one of the few people who's actually read Piketty. His arguments stack up. We are facing a 21st century of rising inequality, rising rent-seeking rather than productive, innovative type of capitalism is increasingly rent-seeking, and the tax laws have shaped this in ways which will actually make the situation deteriorate over time. The idea that we live now in a free market society, which is where the tax laws encourage innovation, simply doesn't stack up. Our tax laws encourage rent-seeking activity, by which I mean it encourages company directors to maximize their tax avoidance, maximize their attempts to get subsidies from governments, not just in developing countries, but governments in Europe as well. And it undermines all the pressures for market competition. So this is both an economic issue and a moral issue. But I think that economics has a moral content. The very idea that the duty of directors is simply to maximize returns to shareholders is based upon a set of values which I challenge. There are moral values behind that idea, and that has to be brought to the equation, Richard. So that's where I'll end up. I think that tax cannot and should not be reduced to simply a set of legal discussions. In almost all cases, laws tend to follow public opinion. And in the area of tax avoidance, I'm happy to say the public opinion is totally with us. It agrees that tax avoidance is not an acceptable activity. And I believe it's long overdue that the law caught up with us in that respect. So, very happy to discuss this, and thank you very much indeed for inviting me.
I'd like to thank our panellists. Different, interesting and challenging ideas have been put forward by all three of them. I'm now under the impression we have got about 25 minutes to take questions and create some answers. I think the best way forward is for everybody who would like to ask a question to raise their hand, and we will get the microphone brought to you because we're actually recording this evening, and then we will take the questions one by one. Who would like to go first?
Thanks. Thank you very much. There are clearly different views across the panel about the extent of tax avoidance by companies, and I just wonder if perhaps you might all agree that with more transparency we could get to the bottom of the true extent of it, or otherwise.
Yeah, that might.
So the question was, we obviously all agree. So Chris, we're just checking the question. You asked about more transparency being good to understand actually what's happening with companies. Okay, so the differences between the panel to understand where the true extent lies.
I don't know if you noticed, I actually agreed with John on the definition of tax avoidance. Tax avoidance is trying to take advantage of loopholes that a government doesn't intend. So my key point is to make sure that we're clear whether we're talking about tax avoidance or problems with government policy. And they are sort of two different issues, both of which require solutions, but they are different solutions. Agree with you about transparency, but I think you have to balance the benefits of transparency with the costs. And I know there's a lot of debate about country-by-country reporting. I think we are going to get country-by-country reporting in some form. I have no problem with that. But I do have a problem with something which, frankly, just puts lots more fees into the pockets of accountants to do masses and masses of analysing data that is going to fill this whole church and therefore not be of any practical use to people. So let's agree that transparency is a good thing. Let's agree what we want it to achieve, and let's work out the most cost-effective way to get there.
Can I just add, obviously country-by-country reporting was originally one of Tax Justice Network's first campaign demands. We framed the original reporting standard. We began, as an economist, I've always assumed that transparency in economic issues is a public good. It helps to shape markets that respond better to public interest, especially in tax. It was never our intention that country-by-country reporting would become a massive exercise in putting every bit of data onto public record, but we thought that the demands that we put forward for country transparency would be particularly useful to initiate investigations where it was clear that the profit shifting was happening. In that respect, I think the potential benefits of country-by-country reporting massively outweigh the potential costs of country-by-country reporting. And particularly since I, as an investigator with many years' experience of investigating, know that in many respects, the lack of this kind of information leads to situations where potential risks are not being identified by investors. So I think that country-by-country reporting is not just a useful tool for tax authorities, it's also a useful tool for investors and, of course, all other stakeholders. Partly because I think it's in the public interest to know whether or not a company is trading in such and such a jurisdiction and paying the taxes due there.
I was drawn to Heather's noting that the CBI likes the idea that firms should speak frankly with HMRC without going around the houses about it. I think that's an enormously attractive idea, that one should have, whatever one's doing, should be capable of being explained openly to HMRC. More generally, I think, and I should have said it, that beyond the ordinary decencies of commercial life and being law-abiding, I strongly fancy that the ethical thing that firms ought to aim to do is speak frankly and robustly, often to their own self-interest, about their own self-interest. And that would include about why they have this or that tax arrangement with the public. Now, I mean, but by that, by the way, almost the opposite of what is normally called corporate social responsibility, which almost always involves firms pretending to be something they're not and flanneling about their supposed moral ambition. I would rather that they had much lower ambitions, but a much more robust and honest way of talking about as many things as possible within some constraints, I admit, and rather testing ones of commercial secrecy. I mean, you can't ask Coca-Cola to give up its ridiculous recipe. That would be suicide, I suppose. But so those sorts of things it can keep quiet. But I would like it to talk frankly about its tax arrangement, for instance.
Can I take another question? Could I go to the gentleman third row down?
Good evening, everyone. My name is Serafim from Communison RC, an NGO which looks into social justice and global development. We're here in a church, and we obviously are attending a conference which deals with morals and ethics. And as a Christian, I would like to put forward a question in regards to land tax, land ownership and taxation, as well as to evolution of the tax system and where there are alternatives into the 21st century. And I'll give a short commentary on that. We obviously know that there has been a whole political economy developed around the so-claimed words of Jesus that give to Caesar what is Caesar's and to God what is God's. And therefore, here we go with 2,000 years of a system taxing people. But tax is related to property. And obviously, in the modern society, we tax people from their birth up to their death, with the sole claim that this is needed for their social welfare and for their pension and so on. Now, regarding the second point of whether there are alternatives in the 21st century to the tax system, do we need a government which behaves like a policeman, and therefore it has all these citizens, in brackets, slaves, which have to pay tax in order to survive? Or can we upgrade to a new system where we have corporations which make profit paying their whatever they want to charity, and therefore being charitable or being non-charitable, and the government creating its own money, and therefore being able to pay whatever it needs for the social welfare? So is really tax such a central, necessary thing in 21st century, or are we actually dealing with more sophisticated, and we're actually covering the system rather than reforming it? We're actually supporting the slavery rather than giving it up and creating a free alternative to what now can be done through computers, technology, and so on.
Okay, so the question,
yeah. The question
is tax dead?
Yeah, the question is going to land ownership and taxation, because obviously under natural law there is no basis for land to be private property. It's not a result of a producer. Private property is the product of a producer. Land is not the product of anybody. It's just there since the beginning.
Okay.
And the second question is whether there are alternatives regarding the tax system, like a government making money out of nothing, just like the banks do, for the social welfare.
Okay.
Sorry for such a long commentary.
That's fine. So, John, can I pose both questions to you first, and then I'll go down?
Yeah, both very, very good and interesting questions, and I welcome them. This morning at 3 o'clock, I was listening to the World Service. They were talking about Brazil, the issues around the World Cup, and one of the issues that came up was land ownership and how unequal land ownership in Brazil is, and what a shocking situation that is. But of course, land ownership in this country is even more concentrated and even hands of an even smaller number of people, and has been for 1,000 years. If you go back 400 years in this country, you would have found that most of the tax revenue raised by government would have been raised from land taxation. And I think there's a very strong case for us reviving this kind of wealth taxation in the form of land value taxes. Most economists agree that land value taxes are actually, you're taxing rental values here, straight off. You can tax them massively without creating any distortions. They are progressive for the greater part. It's a good tax, and I think that I commend it to you as part of a wider tax regime. But as for the idea of allowing governments simply to print money to fund whatever they wish, there are a number of reasons why I think that tax actually is not only the heart of the social contract between citizens and state. I would have to say to you that tax is one of the most extraordinary inventions of human civilization. It is our way of working together towards achieving certain commonly agreed goals through democratically elected governments. Bravo, that's a fantastic thing to achieve. Substitute that with governments printing money, and you simply hand control, a great deal of power, over to authorities who have no need to reference back to you, because it's not your money that they're handling. And you can see this in many of the poorer countries of this, or rather resource-rich countries of this world, where you have despotic governments, think of Equatorial Guinea, who quite simply take all the tax and other royalty revenues coming from oil and don't refer to their citizens and don't look at their citizens' needs. And there's a pattern here. Stronger tax systems with a wider tax base engage citizens more democratically in the decisions of how the money will be raised and how the money will be spent. And I think that is an extraordinary achievement and a great goal. I wouldn't wish us to move on from that unless someone comes up with a much, much better alternative. And so far, I haven't seen one.
I agree with the last bit of that very strongly. And that's why poor people should pay tax, and no taxation without representation, no representation without taxation. Those sorts of things are bound up and interesting. They rather go against the idea that we should use tax to redistribute wealth and get rid of inequality. Because on that model, you would be saying, well, let's cane the rich. On the whole, caning the rich doesn't seem to work, but then I don't think inequality seems to matter very much. There's very slight evidence that it's getting greater or a problem. Piketty seems to have not written an awfully good book, but the wheels will come off that wagon over the next few years. But actually in the next few weeks, they've already begun to come off somewhat. But I rather disapprove of the idea of using tax for redistribution. It doesn't seem to work, and it's probably not a good idea. It might be, Piketty might turn out to be right, it might be necessary, it would be a fright if it's true, because it'd be awfully difficult to achieve. So far, historically, it doesn't seem to have been true. It hasn't been true in our recent history, so far as we know. But the idea that we all pay tax, and that binds us together and democratic, that is indeed profoundly true.
I'll try and keep this very short. There's a very good reason for taxing land. It doesn't move. So economically, a tax on land is actually quite often a very efficient tax. I recommend the Murley's report to you, which is a very detailed summary of what an ideal tax system might look like. Challengingly, one of the things it says is that taxing companies is one of the least efficient taxes because it tends to stifle economic growth, and therefore you might well be better taxing other things instead. In fact, we tax companies, A, because they're there, and they're another thing from which you can collect taxes, and B, as a representation for the tax that should be paid by the shareholders or owners of that company. So I'm not advocating the abolition of corporation tax, but I am saying, actually, if you look at the whole, you should look at the whole range of taxes in working out how you're going to raise the amount of money that a government needs to provide the social goods that it has decided democratically should be provided for its people.
Okay, so lots of hands went up last time. So who would like to ask a question? I'll go to the gentleman in the front row.
Thanks, Catherine. Tim Davis from Mazars. I'll try and keep my questions brief as well. Firstly, to a point John made, I'd like to get the panel's view on whether government policy has created the type of multinational structures that result in low-paying tax. In particular, it's very clear the UK is saying that they want to compete against Germany and other countries for business, and in a way, companies are then taking advantage of the incentives that are put in place. And my second question, so you can decide which one you want to answer, is if there is a concept of fair share, which implies that companies have a choice over how much tax they pay, shouldn't it be their own decision based on their own culture, values and morals to decide how much is fair, rather than for someone else to impose their fairness on them?
First question, do government policies cause company behaviour? Absolutely. Particularly, I think, US tax policy over the last 25 years or so. The US last reformed its tax system in 1986. It is now desperately clunky. If you look at the recently published report by the EU on the digital economy, I was telling Joe earlier, there's a really good table at the back which shows very starkly that US digital multinationals pay very little tax on their non-US earnings because they can. And therefore, yes, governments really do have a responsibility to work out what they want from companies. Your second question, no, governments should work out what they want the laws to say. They should be clear about their policy objectives. Companies should not try to get round it and find the loopholes, but governments need to say what the policy is. And I've actually got a lot of sympathy for, I think, the view that's starting to emerge from the NGOs of let's set a target of saying that a reasonable amount of GDP to collect in tax is perhaps 20%. And let's say, well, if a company is not paying 20%, why not? Explain or comply.
Which would be the level that we're sort of going for
Funny that,
here.
Isn't it? Well, the UK collects more like 40% of total GDP in taxes.
If I don't understand the ins and outs of this, but it's also the level, more or less, that attracted Pfizer to want to come here. Which,
that was to do with the US tax system. I'll tell you over a drink later.
Yes, but they thought, well, what the heck, let's come here.
They were coming here because the US would have effectively given them a $20 billion subsidy on the acquisition of AstraZeneca.
Okay.
That's correct.
Okay.
Oh boy. Yes, I have. I mean, first of all, I would say that the UK government's development strategy for the UK is so absolutely flawed as to be, it is failing. This idea that companies will be attracted and you're going to create a large number of jobs by offering these tax loopholes and incentives, it's a non-starter. Other countries will engage in the race to the bottom. You attract investment on the basis of economic fundamentals, trained labor forces, solid infrastructure, the genuine stuff. Warren Buffett had it right when he said, it's not tax incentives that are going to encourage me to invest in this. And I think British government policy, and I'm not talking about the current coalition, I think past governments have got it massively wrong, and we are engaged in tax wars, and in fact, in many respects, are leading tax wars, which will not in any way benefit us. Look at the recent Fiat announcement they're going to headquarter in London. Ask how many jobs are going to be created. 0. But it will certainly undermine the position of the Italian fisc, and that's not a good thing to be doing. We are deliberately gearing our tax policies to undermine the tax policies of other countries. And I think that this country should now adopt what in IMF's parlance is called spillover analysis, to make sure that our tax policies do not harm other countries, particularly developing countries. Because let me assure you, they do. We lead the way here. The problem we have, of course, is that our government is not an independent agency. I don't think it's even democratically accountable. I think our governments, successive governments, have had their tax policies shaped by corporate lobbying, and there we have a massive problem.
Okay, so let me take another question.
A company that researches corporate, environmental, social, and governance management and performance for investors. And really, I should be answering the question myself, I think, but I'm not quite sure I know the answer. On the one hand, people have been mentioning that some investors have put pressure on particular companies. Google was referenced as one, and then those companies feel some necessity, some need to respond to that. But it seems a sort of a nexus here that might work. We've got brilliant economists and the like in the room, excellent work being done by Christian Aid and some other civil society groups. But what's missing to some extent are investors. And it's how to convince investors that this matters. What is the sort of the grand economic case that one perhaps can make? Obviously, you can't answer that this very second necessarily. But what's the grand case for saying if companies are not paying whatever is to be defined as a fair tax, if you are a large pension fund, you invest all over the world, then you can't really externalize things from your balance sheet because you're exposed to different countries' bonds, different countries' real estate prices, different countries' stock prices, etc. But be it you're a large investor or a small one, it does seem to me that investors can play a key role in pushing forward the tax debate, because if they do hold companies to account, if their reputation is being damaged, if they're feeling under pressure, companies do respond in a whole bunch of other fields and other areas like human rights and supply chains and environment and so on and so forth, not from a CSR point of view, but from a straightforward business strategy point of view. And it's how to make fair tax into or become part of a strategic business interest on behalf of a company. And how we quite get investors to that place, I'm still not sure.
Thanks. That's a really interesting question, especially on the evening for the European Responsible Investors Conference starts tomorrow, which I believe...
I'm speaking out.
Yeah. So hopefully you can start by answering the question.
One of the problems, it seems to me, is that we rather lightly throw around an idea about fairness in tax. And as an earlier gentleman suggested, firms should be charitable. I don't think firms have the resources to be charitable, because I don't think they own stuff such that they can give it away. They are a flow of materials. They're not free just to dip into it and bung it out willy-nilly where they fancy. But moving to the fairness thing, what is a fair tax is so bound up with the problem of what is an efficient tax. Somebody might think that it was unfair that somebody is very rich, and think that fairness is in taking some of it off that person. Now, you could have a discussion as to whether or not that is theft or fairness. But the difficulty is that even within the mechanics of wanting to be fair to the poor, let's say, if you clobber the rich, and it turns out by a process of unintended consequences or intended consequences that you're actually clobbering the poor, then the fairness has backfired. And that, after all, is the problem, as I, a free market person, thinks socialism has. Socialism wants to be nice, turns out to cripple the very people it's trying to help. Now, of course, my side has plenty of moral problems too, but it isn't a done thing that one could simply sort of dream up a notion without knowing an awful lot about how the heck fairness actually flows in the world.
I think investors do have a part to play. When I was in-house, probably about 10 years ago, analysts never asked any questions about tax. I think they are asking those questions now. I think the challenge is, how do you sort the wheat from the chaff? At one extreme, you might have a specific disclosure of a contingent risk in a company's accounts, and that is a real risk which an investor wants to take account of, but it is much harder to determine either just from the information in the accounts. You really can't tell all that much about companies' tax. I do agree that the current disclosure requirements in companies' accounts, I have had some amusing conversations with journalists trying to explain how they worked, particularly one journalist who was trying to analyse the Labour Party's accounts, which was just hilarious. But crucially, it comes back to the same thing. Transparency. Is the company open about what it's doing? A number of companies do now put on their website their approach to tax planning, the principles that they're operating by, and are they willing to engage with analysts? If you, as an analyst or investor, go to a company that you're thinking of investing in, what sort of answer do you get? Before I donate to charities, I quite often ask to see their accounts. So, I donate to Christian Aid rather than World Vision because I happen to think they're a more efficient organisation that's going to make better use of my money.
Can I take one more question? Because it's now 7:01, I believe. Joe? But although this might be the last question on the floor, there's drinks afterwards, so the questions can keep flowing between everybody here.
Yeah. I was interested by something you said, Richard, in terms of it's not a fair fight once you get to developing countries, and there may be a case for companies to start thinking about a moral approach towards tax. I guess my question is, what would that process look like for a company, given everything else that you've said tonight? And how do we decide where that dividing line is drawn? So, at what stage does it become a fair fight? Because it seems that if you accept at one stage, you need to think about that, then you just need to think about it. It's not a never or sometimes.
Well, how you're to behave as a Western company in a developing country is extremely peculiar. Luckily, as a free market person, I can say the great good that they're doing, most of them, barring some bad mineral extraction, but most Western firms are doing good by doing a difficult job, let's say in agriculture or chemistry or something, and in creating wealth. So that to that extent, they don't have to do too much thinking about, blimey, we're not paying much tax. They are doing good by being there. And then they should certainly be want to work with trying to help civil society grow. But that's complicated. Just one time, remember, I know a tiny, tiny bit about how Shell operated in Ogoniland years and years ago. In the 80s, 90s. And they found themselves being very nice to some local communities. But actually, on inspection, the local communities were run by small-time crook politicians who were next door to burglars, as it were. So you think you're helping civil society. It turns out that actually that's so corrupt that you're not really anyway. So it's just complicated. And why should it? Luckily, with any luck at all, before the company has worked out what its decent moral position is, or should be, the country has got rich enough to have a lively life, political life happening, and then it has Western issues. For instance, it is not likely that people 20 or 30 years ago thought say the BRICS would be where they are, in particular, say, Brazil. I mean, there are places now which once posed kind of undeveloped dilemmas and are now in a different world, still complex.
Very quickly, you're absolutely right. I think companies do have an obligation to engage, but it's a real challenge for companies, but it's also a challenge for the NGOs and people like John. John says that one of the problems with the tax system in this country is that companies have had too much influence in developing it. So if you have a company that genuinely wants to engage to build a better tax system in Sierra Leone, they may hesitate if they think that all that's going to bring them is people saying, well, you wrote the tax system, so of course you did it in your own self-interest. So somehow, I think we've got agreement that it's important. We need to find a way to get that constructive engagement so that accepting that both sides are going to act in their self-interest, how can we actually work for the common good?
Well, I'm not going to disagree with anything that's said there. Absolutely. I would make the point, I mean, first of all, most economists recognize, or should recognize, that companies not paying taxes are essentially free riding of public services, and that's a very, very big issue. Economics, particularly of the free market brand, tends to undervalue or understate the importance of economic free riding. But if some companies are able to make use of the justice systems and the roads and the educated public and not pay towards it, you have yet another massive, massive distortion, economic distortion, which does not lead to fair and competitive markets. But I would like to make a comment, because I didn't get back to the first, your question about investment. I've had endless discussions with people within the investment community. I'm afraid I've got to chuck it back at you. Why are you not? Why are you personally? But why is this not on the investment community's agenda? It should be. There are risks attached to tax avoidance strategies. They can and do fall apart. There are reputational risks attached to companies that invest in Africa and turn out not to be contributing to job creation. By and large, they're not. By and large, they're destroying the local economic base, undermining the competition, and establishing monopolistic positions. That's the brutal truth of what's happening in so many countries. But why is the investment community not being a little bit more challenging? That's why, frankly, when a small group of Google investors take the issue, it becomes global news. It's astonishing. We actually ran a headline saying company investors want to pay tax. As a headline, quite extraordinary. So I think you've got to turn it around to the investment community and say, why are you not paying more attention to the risks attached here, and also to corporate responsibility? Because one area where I do seriously agree with Richard is that I do not think that corporate social responsibility is the answer. Fine to be philanthropic, but paying tax where it's due, when it's due, and the amount it's due is the true sign of corporate economic responsibility.
Okay. Thank you very much to the panellists for all your comments. I'm not going to try and sum that up, because I think so many subjects, and we have had a crazy canter through basically, is tax a question of ethics? And it seems to be that there is a huge number of other questions still to be posed, but also discussions like this. So I'd like to again thank JustShare, and also invite you all to stay with us for a drink afterwards. Thank you very much.